earnings season is currently underway in the Nigerian Stock Exchange, and Tajudeen Ibrahim, my guest host, and also the Senior Vice President and Head of Research at Chapel Hill Denham, joins me to lend his voice on the numbers we've seen so far. Tajudeen, when you look at some of the players we've seen, let's just get a broad overview on the way that we've seen the results.
Okay, thank you. I think those results that we've seen so far are, broadly speaking, mixed in the sense that we have seen some recovery reflect in some numbers for Q3, which is outside the lockdown period. Those numbers signal recoveries in revenue, but there are some elements of cost that have really weighed down on some earnings. We have strong numbers in terms of revenue from the likes of Lafarge Africa and Guinness, as well as flour mills. But we have some weakness in profitability in, for instance, Guinness, largely because of the FX challenges in terms of naira devaluation, and but for Lafarge, there were broadly speaking positive sort of those were broadly speaking positive numbers if you look at them from the revenue standpoint and also from the PAT point of view. And also the banking sector is another one for consideration. The banks that we've seen so far is Stanbic IBTC. Those numbers are very strong. The revenue growth is somewhat low, but we have seen strong, PAT growth numbers, largely because of the strategy of Stanbic IBTC in itself, despite the challenging environment, that we currently find ourselves in.
But Tajudeen, do you think the Stanbic result is a reflection of what we can expect from the rest of the banking sector?
Somewhat, because there are two key drivers of those numbers for Stanbic. The first element is the non-interest income, which was driven by trading and FX, sort of gains, so to speak. So you broadly speaking see, trading income for banks being strong because we have elevated prices of bonds and also T-bills, considering the low yield environment that we currently are. So there'll be some significant profit to book on that front. And in terms of FX, on a mark-to-market basis, some of them will have made some gains. So because of the devaluation that we have seen on the Nigerian naira. So broadly speaking, we should see the banks mirroring this kind of trend for Q3 numbers. But in terms of the other elements that supported Stanbic IBTC's number, it is the wealth management business, where we saw fee income growing by like around 13%, and you will see that only for a bank that has a holdco structure. I mean, talking about a bank that has like an asset management business and also like a custodian business, just like we have for Stanbic IBTC Holding. Apart from that, any bank that will report numbers without being a holdco, having a holdco structure, will probably find lower interest income, sort of dampening their numbers. And also my third expectations for the banks is for banks that have strong retail platform should, naturally speaking, see low cost of deposits. So Stanbic IBTC had this over the past 9 months. So we saw that playing out positively on the profitability front. So for banks, we also expect them to record some positive trend in terms of interest expense with if they have actually replaced.
All right then.
expensive
All right, then,
deposit
Tajudeen,
with.
thanks a lot. Quite still a lot to look up to as we look at the markets later on, but we'll keep our eyes and see how the earnings continue to trickle in. Tajudeen Ibrahim is the Vice President, Head of Research at Chapel Hill Denham.